This study examines the financial performance of AirAsia X Berhad and Malaysian Airline System Berhad, two key players in Malaysia's aviation industry, which support the hospitality, tourism, and wellness sectors. Both companies operate in a highly competitive environment where airlines connect travelers globally and provide unique in-flight experience.
AirAsia X Berhad, established in 2006, is a medium-haul low-cost airline based in Malaysia. Beginning as Fly Asian Express, the company served the interior of Sabah and Sarawak before undergoing a rebranding in 2007, launching its first medium-haul flight to Australia. Since then, AirAsia has grown to become the leader in low-cost aviation in the Asia Pacific, offering affordable fares to destinations such as Australia, Japan, South Korea, China, and more. The COVID-19 pandemic presented major challenge to AirAsia X, including suspension of operation in 2020 and debt restructuring in 2021. However, the company may bounce back in April 2021 with excellent performance in 2023. The company recorded a net profit of 331.5 million out from PN70 classification and increased flight frequency to 144 weekly flights to 22 major destinations.
Background of company Malaysia Airline System Berhad. Malaysia Airline System Berhad, established in 1947 as Malayan Airware and renamed in 1963, is the national flag carrier of Malaysia. Operating from its main hub at Kuala Lumpur International Airport and secondary hub at Penang and Kota Kinabalu, the airline serves over 50 destinations across Asia, Europe, the Middle East, and Australia. Known from its world-class service, Malaysia Airline offers first, business, and economy class opinion on a modern fleet including Boeing 737 and Airbus A330 aircraft. The airline have received numerous awards from safety, in-flight entertainment, and customer service. Despite facing significant challenge, including the tragic MH370 and MH17 incident in 2014, Malaysia Airline has shown resilience. It was fully accredited by Khazanah Nasional and underwent restructuring to improve financing stability. During the COVID-19 pandemic, the airline focused on domestic travel and logistics while enhancing the digital system for better customer experience.
This is liquidity ratio for AirAsia X. Interpretation for liquidity is the liquidity ratio in these 2 years determines the company's ability to cover short-term obligation. The current ratio in 2022 was 0.57 and decreased to 0.56 in 2023. Interpretation quick ratio. The quick ratio improved slightly from 2022 but remains below 1.0, indicating the company may struggle to meet short-term obligation even without relying on inventory. This reflects tight liquidity and potential financial challenge. Interpretation net working. The negative net working capital has worsened in 2023, indicating that current liabilities significantly exceed current assets. This highlights potential difficulties in funding daily operation and a growing reliance on external financing or credit to cover short-term obligations.
AirAsia X Berhad inventory turnover surged from 89.8 times in 2022 to 362.61 times in 2023, an increase of 272.81 times. This highlights improved efficiency in managing inventory to drive sales growth, overcoming the challenges faced in 2022. AirAsia X Berhad total asset turnover rose from 0.35 times in 2022 to 0.81 times in 2023, an increase of 0.46 times. This indicates improved operational efficiency and better utilization of assets to generate sales in 2023 compared to the previous years. AirAsia X Berhad account receivable turnover increased from 3.34 times in 2022 to 3.97 times in 2023, a rise of 0.63 times. This improvement reflects better efficiency in managing credit sales and converting receivable into cash, enhancing the company's ability to generate sales in 2023. AirAsia X Berhad fixed asset turnover ratio rose from 0.7 times in 2022 to 1.88 times in 2023, an increase of 1.18 times. This highlights improved efficiency in utilizing fixed assets to generate revenue, showcasing better operational performance in 2023. AirAsia X Berhad average collection period improved from 109.16 day in 2022 to 92.01 day in 2023, a reduction of 70.15 day. This indicated enhanced efficiency in collecting customer payment, better receivable.
2023, that is 1,116.55%, compared to 2022 is minus 389.01%. The debt ratio decreased in 2023 to 111.69%, indicating lower dependencies on debt to finance asset and better finance stability. The company's ability to cover interest expenses improved in 2023, which is 4.27 times compared to 2022 is minus 43.81 times, reducing the risk of debt. Malaysia Island. The company is less dependent on debt in 2023, which is 59.03% compared to 2022, which is 66.94%. This shows improved finance stability. The slight decrease in the debt ratio shows the company is less dependent on debt to finance asset. This shows better finance in 2022, 61.82%.
Profitability ratio calculation. Net profit margin reflect how much revenue of sale could be collected by a company. Net profit margin in 2022 is higher than in 2023 with 4,044.37% and 30.1% respectively. There are 4,031.6 0.19% decrease in the net profit margin from 2022 to 2023. It showed the highest return to shareholder. Return on equity (ROE) refer to the measure of company's profitability to its stockholder equity. AHFT's return on equity in 2022 was lower than in 2023 with negative 12220.66% in 2021 and 245.96% in 2023 respectively. There are 12466.62% increase in the net profit margin from 2022 to 2023. The highest ratio 245.96% in 2023 in the thus higher income to shareholder. Return on asset (ROA) is measure of a company profitability above its total asset. AHFT's return on asset in 2022
Interpretation liquid ratio for Malaysia Airlines. The liquidity ratio in these 2 years determines the company's ability to cover short-term obligation. The current ratio in 2022 was 0.90, decreased to 0.85 in 2023. Interpretation, the quick ratio dropped from 0.87 in 2022 to 0.81 in 2023. This means Malaysia Airlines System Berhad is dependent more on money owed to them, which is harder to turn into cash quickly. To pay off short-term debts, the company needs to manage its cash better and collect payments faster. Interpretation for net working capital. The negative net working capital for both years mean that Malaysia Airlines System Berhad's short-term debts are greater than its short-term asset. The larger deficit in 2023 compared to 2022 by 334,171 shows
Malaysia Airlines System Berhad inventory turnover increased from 32.0 ton in 2022 to 38.58 ton in 2023, a rise of 6.58 ton. This improvement indicator of efficient inventory management and better utilization of inventory to support sales growth in 2023. Malaysia Airlines System Berhad total asset turnover rose from 0.16 ton in 2022 to 0.24 ton in 2023, an increase of 0.08 ton. This reflects improved efficiency in generating sales and better utilization of asset in 2023 compared to the previous year. Malaysian Airlines System Berhad account receivable turnover increased from 5.83 in 2022 to 6.23 in 2023, a rise of 0.4 ton. This improvement indicated enhanced efficiency in managing credit sale and converting receivable into cash, supporting better sales generation in 2023. Malaysian Airlines System Berhad fixed asset turnover ratio rose from 5.68 in 2022 to 8.15 in 2023, an increase of 2.47 ton. Is reflect improved efficiency in utilizing fixed asset to drive sales, showcasing financial management performance in 2023.
Company is less dependent on debt in 2023, which is 59.03% compared to 2022, which is 66.94%. This shows improved finance stability. The slight decrease in the debt ratio show the company is less dependent on debt to finance asset. This show better finance in 2022, 61.82% in 2022, less to 16.89% in 2023. The company ability to meet interest payment improved significantly in 2020.
Profitability ratio calculation of Malaysia Airlines System Berhad. First, net profit margin reflect how much revenue of sale could be collected by a company. Net profit margin in 2023 is higher than in 2022 with 11.05% and 5.99% respectively. There are 5.06% increase in the net profit margin from 2022 to 2023. It shows that highest return to shareholder. Second, return on equity (ROE) refer to the measure of a company's profitability to its stockholder equity. Malaysia Airlines System Berhad return to equity in 2022 was lower than in 2023 with 2.52% in 2022 and 6.79% in 2023 respectively. There are 4.27% increase in the net profit margin from 2022 to 2023. The highest ratio of 6.79% in 2023 indicated highest income to shareholder. Next, return on asset (ROE) is a measure of company profitability of its total asset. Malaysia Airlines System Berhad's return on asset in 2023 is 2.60, that is higher than 0.96% in 2022 respectively. It increased around 1.64%, indicating a higher return on the firm investment. The operating profit margin illustrates the revenue made by a company's activity before deducting tax and interest charge.
Comparative analysis AirAsia X Berhad and Malaysian Airlines System Berhad to 2022. First is the first comparison of analysis liquidity ratio for both company in 2022. Liquidity ratio show that for the current ratio in comparison to AirAsia X Berhad, which has a liquidity and efficiency ratio of 0.57 times, Malaysian Airlines System Berhad has a high ratio of 0.90 times, showing the company's capacity to pay down in short-term debt with its current asset. Next, for quick ratio, the ability of Malaysian Airlines System Berhad to carry out short-term obligation without using inventory is 0.87 times higher than that of AirAsia X Berhad, which is 0.57 times less capable. Lastly, net working capital. Compared with Malaysian Airlines System Berhad, AirAsia X Berhad has more working capital. This due to its strong financial standing. AirAsia X Berhad can pay its bill immediately. Next is the comparison of analysis liquidity ratio for both company in 2023. Liquidity ratio show that for the current ratio, AirAsia X Berhad liquidity and efficiency ratio is just 0.56 times, whereas Malaysian Airlines System Berhad is 0.87 times. indicating the company's capacity to pay down its short-term debts using its current asset. Malaysian Airlines System Berhad has the highest ability to pay short-term obligation without relying on inventory, which is 0.81 times, compared to AirAsia as Berhad has the lowest ability of 0.55 times. And lastly is net working capital. Malaysian Airlines System Berhad has more working capital than AirAsia as Berhad. This Malaysian Airlines System Berhad can pay the expenses at an immediate rate because the financial condition of the company is in a good conditions.
To equity ratio, which shows how much a company depends on borrow money compared to its own funds. For AJX in 2022, the ratio was negative 389.01%, which is very risky because their equity was negative. But in 2023, it increased to 1116.55%, meaning they improved their equity. However, this ratio is still high and show they rely on that. For Malaysia Airlines, the ratio was 66.94% in 2022 and reduced to 59.03% in 2023. Next, the debt ratio, which measures how much of a company assets are funded by debt. For AHX, the debt ratio decreased from 111.69% in 2022 to 95.68% in 2023, while improving, so their debt still exceeds their assets. For Malaysia Airlines, the ratio was 61.82% in 2022 and slightly reduced to 60.89% in 2023. AJX had a negative ratio of negative 43.81 times in 2022 but improved to 4.27 times in 2023. This shows progress but is still below industry standards. For Malaysia Airlines, they perform much better, increasing from 200.01% in 2022 to 358.94% in 2023.
2023. In 2022, net profit margin in Asia is 444.37%, divided by expansion gain. In Malaysia Airlines have 5.99%, indicating stable operation. In preparation, AirAsia performance was extraordinary, but unsustainability while Malaysia Airlines show realistic profitability. And to return of equity, Malaysian Airlines have negative 12,230.66%. They showing service financial stability. In Malaysia Airlines have 2.52%, reflecting low but positive return. In integration, AirAsia faced equity challenge, whereas Malaysia Airlines generated modest shareholder return. And return
With the inventory turnover ratio in 2022, AirAsia has got an inventory turnover of 89.80 times compared to Malaysia Airlines, which was only 32.00 times. However, in 2023, AirAsia Berhad showed a significant improvement with an inventory turnover of 362.61 AirAsia times, while Malaysia Airlines only achieved 38.58 times. This indicates that AirAsia Berhad has become increasingly efficient in managing its inventory. Next, we look at the total assets turnover ratio. In 2022, AirAsia Berhad had a total assets turnover of 0.35 times, while Malaysia Airlines was at 0.60 times. By 2023, AirAsia Berhad improved to 0.81 times, whereas Malaysia Airlines slightly increased to 0.24 times. This suggests that AirAsia Berhad continues to utilize its asset more effectively to generate sales. Moving on to the account receivable turnover ratio. In 2022, AirAsia Berhad recorded 5.8 with the inventory turnover ratio. In 2022, AirAsia Berhad got an inventory turnover of 89.80 times compared to Malaysia Airlines, which was 2023. Malaysia Airlines improved further to an average of 58.60 days, while AirAsia Berhad increased to 92.01 days. This shows that Malaysia Airlines has better cash flow management, being able to collect debts in a shorter time frame. In conclusion, profitability perspective, while AirAsia Berhad improved its gross profit margin in 2023, it still remains lower than that of Malaysia Airlines. However, the sustainability of this performance is questionable, as evidenced by a decline in the net profit margin to 13.18%. Malaysia Airlines, on the other hand, report a steady net profit margin of 11.05%, indicating its ability to generate consistent sales earnings. Next, when we look at return on equity, AirAsia Berhad show a significant increase, but this figure may be excessively high due to exceptional and potentially unsustainable factors. Malaysia Airlines demonstrate a more realistic and sustainable performance with a modest but steady return on equity of 6.79%. In terms of asset efficiency, both companies met gains with AirAsia Berhad continuing to outperform Malaysia Airlines in return on assets. However, when examining liquidity, Malaysia Airlines System Berhad has a current ratio of 0.85, indicating a need for improved liquidity management. AirAsia Berhad face greater challenges in meeting short-term obligations with a current ratio of 0.56. In conclusion,
In conclusion, while Asia Berhad has shown recovery in several areas, it must urgently address its debt and liquidity issues. Malaysia Airlines System Berhad, on the other hand, is in a more secure position with a balanced capital structure and steady profits. However, to remain competitive in this challenging market, both companies must focus on innovation and improving operational efficiency. That's all from me. Thank you.